everybody. I'm Erica Clark, the producer of the speaker series of the Bellwether magazine. I'm joined by Michael, who's the creator of the magazine. The Bellwether magazine is a magazine that's dedicated to entrepreneurs and business people. Their stories matter to us, and we want to share them. It's our mission to deliver a leverage tool that provides you with value and great stories. We do not have any ads, which makes this magazine free to contributors and subscribers. Your content will always remain yours because we do not copyright. And we want to make sure that you subscribe to our YouTube channel, our Instagram and LinkedIn accounts at the Bellwether Magazine. So today's episode I'm really excited for. It's entitled Mastering the Art of Tax Savings, and it'll be presented by Andrea Bell. We want to welcome her. So Andrea obtained her bachelor's degree in the accounting from Weber State University. She started her career in the corporate sector and then went to the private sector, working for CPA firms. In 2015, she started her own tax firm. In the last 6 years, she's expanded her tax business to a full-service accounting and consulting business. She coaches other accounting and small business owners on her methods of scaling their businesses around their value. She founded Thrive Business Owner Retreats, which brings women business owners together to build and inspire them to take their life and their business to the next level, all while having that work and family life balance. These women are given the tools and resources to create the kind of life and business that they want without sacrificing themselves, their health, family, spirit, and purpose, and they can truly thrive from this. So, Andrea, I want to welcome you to today's episode.
Thank you. Thank you. I'm super excited to be here. I'm like, it's morning, we're ready to be here. So I noticed lots of familiar faces and I'm super excited. I don't know if I saw everyone, but I'm super excited to be here with you. And some of you I don't know and haven't met, and I'm excited to get to know you better. So I'm Andrea. And one unique thing about me is that I love taxes. I know, I imagine us in person, like this is where you would throw like tomatoes at me because you guys are like, I don't. Taxes are terrible. I know no one else loves them, but I do. And I'm super excited to share, after doing taxes and working with businesses for over 20 years, I've worked with hundreds and hundreds of business owners and saved them millions of dollars in taxes. And so I feel like I've learned a couple things. I've learned a couple things and I got a couple secrets that I'm sure you haven't heard of. And I'm super excited to share those with you. So I know taxes can be super duper stressful. And I noticed like taxes are like, it's like a physical stress. So have any of you guys felt stress from taxes or finances? Yeah. Where do you feel it? Do you feel it like here? Like I notice my clients come in all over, all over. I love it. My clients come in and they look physically exhausted. Like they're so exhausted. And my favorite comment that they say, and it happens for almost everyone, especially new clients who've never been with me before, is I feel relieved. They're like, I feel like a load has been lifted off just telling you about my financial stresses or my tax stresses. And I notice they're like visibly lighter. And it makes me so happy to be able to share that with them. And so I just feel like this is the time to give back to you guys. And I feel like I've been super blessed in my business. I'm so lucky to have worked with so many businesses and just learned so much. So I want to give back. And what a better group to give it back to, because I know every single one of you is going to do good things in the world. And so if I can help you save in taxes, that ends up being more money in your pocket. And that's going to help you bless your family. It's going to help you bless your communities. And I know all of us have big, great, crazy visions to bless the world and impact the world in greater ways. And tax savings is one of those ways that will help us all in that way. So I think I'm good if you want to pull up the slide. So I think we're just going to get right into it. There is so much to cover, and I'm super duper excited to share it with you. So my why is to help you, but my why is also to help these people. I'm changing where my face shows up. Sorry. No, it's not working. It doesn't like me. I can't see my picture and see all of you at the same time. But my why is to help these people. I love my family. I love my kiddos, and I want to show them that like the sky is the limit. They can do anything. And being a business owner has truly blessed me. And I know it's blessed each of you too. And I hope they see the vision of that as they grow their businesses and make money, they can make an impact on the world. And I'm super excited to show them that. So go ahead and skip to that next slide. Okay, so I started with the top 5, and then I was like, I can't, I have to add 6. So now it's the top 6 tax saving strategies that are going to save you thousands of dollars in taxes. So go ahead and skip to the next one. So we want to focus on paying taxes like the wealthy. Why do you think, and somebody unmute and tell me, why do you think wealthy people pay less in taxes? Anyone can share.
Because they have a team to not only save them taxes, but to plan ahead, because it's going to come and they know. So they strategize, they have a plan, and they have professionals that take them through it, because they make too much money to do it themselves.
100%. Thanks. Boris, what were you going to say? I saw you unmute too.
I think Eric did a great job. He covered all the bases there.
Yeah, exactly. They have a whole team of people constantly looking out throughout the year for their best interest, not just a team of accountants, but a team of lawyers and all kinds of people looking out for them just to save money. And so
things happen so fast, right?
Yeah.
Like they happen in a week or two, they can make a change. And if you wait for the whole year, you're going to miss out on whatever opportunity, right?
Exactly. Tax laws are changing so quickly. And so we don't always know what those are. And then your question is like, why is my tax accountant not just doing this for me? And it's because they're so worried about getting your taxes in on time that sometimes they don't have time to fit you in to do the tax strategy and stuff. But we want to talk about tax strategies. You can go ahead and skip to the next one, just so that you know what's coming up again, being planning. So the biggest thing is 99% of the tax law is goes for business owners and investors. So if we know that they're for us, then we can do that. And tax strategy is nothing more than looking to be able to find the tax incentives that you already qualify and then do the things you need to do to be able to claim those. So, and then the next thing is, like Eric said, was that being proactive, not just waiting till the end and hoping that your tax accountant can find those things, but being proactive and actually making strategies to make sure you're saving the most. You can go ahead and skip to the next. Okay, so who benefits from tax strategies? And I think like a lot of people think that it's only big business owners who are making a lot of money. And I would like to say that it's not. Anybody who makes a W-2 wage over 30,000 should be a business owner, because you can't get rid of those wages. You can't get rid of those taxes, but if you have a business, you can. And so I want to show you. So I guess I feel like most of you know, but like, what is a business? It doesn't have to be something crazy. It can just be a side gig. It can be an MLM. You could be a real estate professional. You could be running your farm, anything 1099. Or most of us sometimes are still doing the sole proprietorship, and that's totally fine too. But all the things that you pay self-employment taxes on are going to allow you to create a business out of that. And so I want you to be thinking of that, like, how can I do that? Go ahead and skip to the next. So this is just an example, but just imagine if you were a small business owner and you could get $100,000 in tax-free income that first year. That would be pretty crazy. So we're going to go over a lot of these things. So this is just an idea of it adds up quickly and can save you substantially. Go ahead and skip. So we're going to go over travel, home office, vehicles, the Augusta rule, hiring your kids, and then S Corp, but most of all, reasonable compensation. So the biggest myth that I want you all to see is that I can't take all these deductions, I'll get audited. And that's the biggest thing that I hear when clients come in. And the worst thing I hear is that they're like, I spent all of my money, so I didn't have to pay any taxes. And I was like, hold up. We don't want your income to be zero. I want you to keep your money. And then we're going to use tax strategies to get rid of the tax on it. So the truth is, tax codes are made to benefit small businesses. Why would the government be concerned about benefiting small businesses? Why would they care? Anybody can say.
They account for a huge part of the economy. It's like 99% of the revenue that comes in is not from the 11,000 large businesses. It's from the 50 million small businesses.
Exactly. And I actually misput this on here. It's 99.9% of businesses are small businesses. And they do say like small businesses are like 25 million or less, you know? And so those are still can be some pretty decent sized businesses, but they employ over 50% of the workforce in the US. So that's huge. So small business drives our economy to thrive. So the government wants our economy to thrive. So they want to bless small businesses by giving them tax incentives to do what they want us to do, to hire employees, to spend money and provide industry and different things for our economy. So it benefits them. So that's what I want you to keep in mind, that these are for your benefit. Don't be scared to take them. Do them in the correct way, in the legal, ethical way, and you don't have to worry about it at all. Go ahead and skip to the next one. So a couple things you want to do to be able to claim all those allowances that you're entitled to is you want to, I moved my face again. This is hard. I can't see my thing in this. Okay, whatever. Okay, keep accurate records. So don't forget about like your startup cost. I would suggest using a software so you don't miss stuff. I find that when clients come in at the end of the year and they have a messy spreadsheet and all their receipts and stuff, I know they are missing thousands of dollars in expenses that they just didn't think about. They misplaced the receipt. So I would definitely say like having a good bookkeeping process, whatever that may be, like keep track of your receipts throughout the year so you don't miss anything. Any expense, while we're talking about these, any expense related to growing your business or just related to your business is 100% tax deductible. So I want you to keep that in mind. Like that's what we're going to ask ourselves. Like, is this business related? Could I make this business related? So go ahead and skip. So why do we care? Why do we care about tax savings? And I think this is a really good illustration. For every $10,000 that I can find you in tax savings is as if I gave you a $70,000 raise in revenue. So why is that? Let's think about it. Let's think about why that would be. So we have our income that comes in, then we have overhead costs, production costs, employment costs, and then we get to the bottom and maybe we have a $2 profit, and you're going to pay probably almost half of that in taxes. So if we can save you in taxes, we're going to give you a significant raise. So that's where I want you to give yourself a significant raise after today. Go ahead and skip. Okay, so we're going to play a game because I want it to be interactive and I want to see what kind of things you can do. So whoever wins, I'm going to send you a $100 Amazon gift card. So you need a piece of paper out. Put it in front of you because I'm going to have you take a picture of it at the end, and whoever has the biggest tax savings is going to get a gift card. So get a piece of paper out and let's get going. Okay, go ahead. Okay, secret number one, travel. You can skip to the next one. Just imagine going on vacation to Hawaii with your beautiful babies and having the time of your life and being able to write that off. Did anybody know that they can write off their travel expenses? I can't see everyone. Eric knew that. Okay, good job. I only see like 4 people. Okay, Carla knew that. So I know that most people think like I can write off my own travel expenses, but what about the travel expenses for our family? Most of the time, if it truly is only for you and you're traveling, you're only going to want to write off your expenses, but you can write off your airfare. Your hotel does not change if you have 1 person or 5 people in your hotel. So go ahead and write that off too. But most of the time I'm like, if it's not for business, you're not going to write off those expenses for the meals for your kids. But what if we could find a way? What if we switch what we're asking ourselves and instead we say, how can I make this tax deductible? What if we do a photo shoot on the beach? What if I use my kids and my family and my advertising? Now they are there to benefit and bless my business. And now it's 100% tax deductible. So the biggest thing I want you to do if you're going to be a little bit more aggressive and do those kind of things is keep detailed records so that 7 years from now, you get audited and you're like, you know what, that was actually just a family trip. I shouldn't have written off my meals. But you had come up with a way to deduct it in the past. Make sure you document that, because the IRS agent is going to tell you take those off, but we don't want to take them off. We want to be able to claim them. So just keep good records. So we were just talking when we first got on, and I just got back from a retreat with Luba, and it was amazing. And it truly blessed my business. I was growing, I was networking, I was creating content. And so the whole thing was tax deductible, and it still blessed me. I still was renewed and rejuvenated. And like Eric was talking about also, like if you went to Florida and you did those things, networking is still huge. You could be meeting people that are going to benefit and bless your business. So these events that you're attending, you're learning, you're expanding, you're growing, you're spending money to put yourself in places that are going to bless your business. So make sure you're deducting those. Go ahead and skip to the next one. Secret number 2, home office expenses. Who works from home? Raise your hand. Okay, so Miss Luba, I'm going to call on you. How big is your home office?
I have my shit all over, so pretty much the whole house.
Exactly. So let's just say 300 square feet to be conservative. And then how
Sure.
big is your whole home? What percentage of 300 square feet would be of your
2,500 square feet.
So about 10%. So if we just take 10%, did you know that you can deduct 10% of your rent, your mortgage interest, your utilities, anything, garbage, trash, water, all of those things are tax deductible. Did everybody know that? So I want you to make a hot guesstimate. Oh, the first one, I want you to write down your last time that you traveled yourself with a couple as a family and how much it costs. And I want you to put that on the top line. That's going to be your travel savings. If you could have made that business related and worked that strategically, how much would you have saved from your travel? The second one I want you to write down is make a hot guesstimate of your annual expenses or your monthly expenses for your home. And I want you to times that by 10% at the smallest. If you feel like your office is more than that, then make your percentage bigger. And then just times that by 12. So that's going to be your second number.
Is it only 10%, or can you do it as like what's real?
Whatever percentage it is. So like
mine's
my office, right? So if it's bigger, so anything that you would be able to prove or feel comfortable explaining to an auditor, right? So like if you feel like my whole house is way too much, that's stressing me out, that's maybe would throw a red flag. Or my whole house is truly my business and I'm writing the whole thing off, I feel good about it. So I would do, the IRS does stipulate that it should be a separate area from your house, so they do like that. I think that you could find a way to make it separate if you needed to. But I would say definitely like just a home office and then divide that by the total square footage of your home. So if you're in a higher populated, a higher density area, your home office could be a greater square footage of your whole home because square footage is at a premium, so you're going to get a bigger benefit from that. Any other questions on that one?
I had no idea about, so in general, I have an awesome, my husband has a job security because he's been doing taxes for like whole 27 years.
Mm-hmm.
I did not know about the garbage. Like I knew about the percentage of the home and many other things, but
Mm-hmm. Everything. What about if you had somebody coming and doing your lawn service? What
he
about
does that himself. However, once I invested into reorganizing my whole basement with like boxes and like this beautiful thing, women came and like cleaned the whole thing. I did write it off because it was organizing my business space.
So your home office.
Yeah, I have a question about your home office. This is for you, Loretto. So my wife and I, we just did some renovations to the house, which included revamping of the lower level where my office is, and we also created a studio for her. She has one upstairs. So all that space is business related, so even all of that can get deducted. Is that correct? As business
100%. And all of those improvements that you made can be depreciated over time also for improvements to the home. Yep.
So Andrea, can you go over that for him, like and for me? So if I'm gonna spend $50,000 and I'm at the 10% ratio, okay, so that's $5,000. How long do I have to depreciate it?
Okay, so for home office expenses, like when you do things like that, they're considered leasehold improvements. So they would be over 15 years. So you can deduct those over 15 years. The 10% that is business related, or if his is the whole lower basement, you know, then it's probably going to be closer to like 50%. Oh, now you're muted.
Quick question, Andrea. When you
What?
were off, we were playing around.
Yeah.
And I
Okay.
said, well, what if you had your home office, but then you recorded a video in your kitchen, one in the dining room and one in the living room, like every week? Could you deduct all of that as home office?
Right. I think you can. Sometimes it doesn't become necessary to, and potentially like we just think about like explaining that to an auditor. So maybe like the home office we use for the percentage, and then we're going to talk about the Augusta rule that allows you to rent your home from yourself for 14 days tax-free. And we're going to talk more about that. I would use that in that situation, you know, and maybe be a little more aggressive on the market value. But you could, as long as you can explain it to an auditor and you feel good about that, even if you're saying like weekly or daily, like a lot of times they'll do like hours. So like a daycare does hours in use instead of square footage. So if you're like, well, I did a YouTube video today, but they might come back and say, well, it was only one of the 24 hours. So now you got 1/24th. So I would think about that. You know what I mean? Like they could hit you more aggressively. So sometimes it makes more sense to be not quite so aggressive on that and take advantage of bigger things that will save you more. Home office. So this is what I was talking about. Oh, you know what else I forgot to put on there? Homeowners insurance, property taxes, mortgage interest or rent, utilities, garbage, water. Yeah. And then homeowners insurance as well. But then if you do a bigger percentage, your cell phone, I do closer to 80 to 100% because I am on that thing constantly. So I don't want to take 10% of my cell phone. I want to take the business use of my cell phone. So that one's going to be higher. And the internet, it used to be easier to deduct the internet because we were like, we have to have high speed at home because nobody had it. But now it's kind of the same. So you can choose whatever works. Whatever works with, sorry, I was looking at the comments, whatever works with what you feel is reasonable for how much you use your internet. So 100%, I use 100% of mine. So because I know I could make that legit. But then I want you to think about your office equipment at home, your computer, your electronics, your cell phone, your office furniture. Like I go and buy new decorations because I love them, but it also like makes my office nice for people so I can write those off. And then think about other personal items that you're using for your business that you could potentially depreciate, and those can save you significantly as well. So go ahead and skip to that next one. So what about our vehicles? Does anybody know how big your vehicle has to be able to get the full Section 179 depreciation expense?
14,000 pounds?
What was it? Sorry.
14,000 pounds?
14,000. It's actually 6,000. Yep, but close. The 14,000 is considered heavy. So yep, those ones are 100% for sure, always. And then first the smaller ones, the 6,000. So that's like a small SUV, maybe a light truck. Then you're getting the maximum benefit for the depreciation. Skip to that next slide for me. When we're talking about vehicle costs, how much of your vehicle cost can be deducted? And I would say 100% if you're driving it 100%. What if you're like, I use it 50% for business and 50% for personal? How much of my car am I going to be able to write off?
Well, I would
50%.
guess, yeah, 50%, right? But
50%, yeah.
if you have a third vehicle in a household, let's say you have 3 vehicles, husband and wife use their vehicles for personal use, and then you got this third vehicle, which could be the 100% vehicle, right?
100%. Exactly. That works too. Or I was talking with Eric and I was like, but how can you get that mileage up? Is the next question you can ask yourself is, can I get that business mileage up? So if you are considered commuting is not tax deductible, but all of us raised our hand and said we have a home office. So, but what if our first job was from our home office, and now any commuting that we do, that's to the second job. Now that is 100% tax deductible. So I don't know anybody who doesn't check their emails or their phones or do some work in the morning before they head off to whatever job, if you are still working your full-time job. So as long as you're keeping track of those things, like now you've got way closer to 100%. What if we also make our grocery trips and different things in conjunction with when we run out of things for our business? Now those are business related as well. I'm always picking up Post-it notes, pens, pencils, paper. I ran out of something, and now my grocery trips are tax deductible as well. So think of the ways of how can I make that tax deductible? So go ahead and skip to that next one. And so then I just wanted to hit really quick, mileage or actual. So a lot of people think they're claiming their depreciation and their mileage. It's either or. And the IRS really doesn't like us to flip-flop back and forth. You can change it when there's a significant change in your business or something has significantly changed. But you don't want to be jumping back and forth, because that's going to trigger a red flag. And, if it's legit and you have reasons for it, that red flag is not a big deal. But I would just, usually the first year or two, we track both and figure out what is going to be the biggest benefit for you, and then go with that one. And then we just stick with that until something significant changes. But it's not like you use it till the car's depreciated and then you switch to mileage. They don't want to see that, because then you're kind of trying to work the system and they know that. So go ahead and skip to that next one. Secret number 4, the Augusta rule. Okay, so for the Augusta rule, go ahead and go to that next one. Yep. The Augusta rule says that you can rent your home from yourselves for 14 days. And you're going to use, the way you figure it is you're going to use the market rate. So I want everybody to think of what it would cost in your area in a busy time of the year. In a busy time of the year, what would it cost to rent a hotel with a kitchen and all those things to be able to do your podcast or your marketing shooting or your vlog or whatever? If we had to rent that from somebody else, a specific location, what do you think that price would be per day? Anybody have a guesstimate in their area?
$600 a day.
600 would be a very reasonable guesstimate. In higher density areas, it could potentially be more. So you could do some.
It could be
research.
1,200. Could be 1,200 a day.
Okay, so you're going to take 1,200 and times that by 12 or 14. Sorry, 14 days, and then you're going to put that amount in the Augusta rule. And that's significant. That's really significant. The cool thing about that is you're not paying rent expense. If you're renting your basement apartment to somebody, you're still paying self-employment tax on that, but this is 100% tax-free. You don't have to pay tax on that money. So yours would be over $14,000. That's huge. So a good market. Go ahead.
So my question isn't that mostly for like corporate meetings? I mean, that's kind of
meetings or marketing or advertising or
anything.
photo shoots, whatever is business related, right? So, but most times it becomes a meeting. Like we would have our people over for dinner, and just have a nice dinner. We always talked shop, even though we try not to, but we're talking that we're building relationships with our employees and we're using our home for it. So we're going to rent it from ourselves. But then there's other times like where I showed some pictures of like my family and different things that I had a photographer come over and I used my whole house to do a photo shoot. So I'm going to rent it from myself that day. So there's lots of different ways you can just think of the ways that it benefited your business and document that. Yep, exactly. Okay, so go ahead and skip to that next one. This one is one of my very, very favorites, and I don't know if everybody knows about it. So hiring your kids under 18 is again a tax-free way. These kids, you issue them a W-2 and everything, but they pay no employment taxes on that. So it's tax-free income that goes from your business. So it gives you the deduction on your business, and then you do not have to claim taxes on it on your personal tax return because they get to claim up to the standard deduction. So go ahead and skip to that next slide. And so this year, the standard deduction is $13,850, and next year it jumps to $14,600. So you're going to times those numbers. So I would do the 2023 times $13,850 by the number of kids that you have under 18. Over 18, you're still going to get like a little bit of a tax benefit. They're in a better tax bracket than you are, but it's just not as significant. So just the ones under 18. And then how do you do that? How do you do that? They need to have a legitimate work reason in your business. So a lot of people are like, oh, she files for a half an hour a day and I pay her $10 an hour. Like, it's going to take you forever to get to that. You can back into it that way, but you can't pay a 2-year-old to do filing. So what's an easier way? Use them in your marketing. Use them in your advertising. The Gerber baby, they pay $40,000 a year in advertising. So why can we not pay our kids 12 or 13? So it's huge. And that becomes a really easy way to do it. Because we post our kids and our family all the time on Facebook and stuff, I would just do it from your business page and throw some marketing money behind it on some Facebook ads. And then you've totally made that legit that you're using them in your marketing. Does anybody have any questions on those last two? I'm sorry that I can't see your comments at the same time that I can see your cute faces. We're good.
Can you add something about, I want to ask, I have my daughter working with me at my publishing company, and she's operations and marketing,
Okay.
But she's 27.
Okay. So
right
same
now,
thing.
I have her as a 1099, but is there anything else I can do with her?
I like the 1099 better just because I can find ways to get rid of tax. Do you know what I mean?
Yeah.
You can pay her a W-2 income if she needs it. Again, you're getting the write-off for your business and she's in a lower tax bracket. So you're still, saving her some taxes. If you can't think of enough write-offs, don't do 1099 for her because she's going to get hit with self-employment tax,
She's got plenty. Yeah.
We just already talked about, we can save her at least $100,000. So, so I like 1099. You just have to be careful about the only people who care about the 1099 is more like the state employment agencies, and they could potentially ding you. Dance studios have gotten in trouble. I just had my one of my gyms get audited, and he got in trouble because if you're dictating their hours, what makes an employee instead of a contractor is you tell them when to come and go, and you have management say over them. Whereas a contractor is separate and they dictate their schedule. They do their own thing. They're only hired to fulfill like a requirement. And the state came back and was like, nope, we want employment taxes on those. So, where she's a one-off, you're probably fine.
Okay, great. Thanks.
So you bet. Any other questions that I missed? I went over the vehicle really fast. Okay, go ahead.
I have a question about the vehicle because of the price of gas in California. Being, $6 and higher per gallon. What are the rules around that?
So you can either do, sorry, go ahead. I missed that last sentence. Sorry.
No, I was coughing while I was talking. I was just asking if there are any rules around that.
Just the rules is I would just keep track of everything. I just do everything out of my, I just swiped down that comment. I just do everything out of my business account, and then I look at it at year end and see which one is going to be the bigger benefit. So as you're charging, you can charge it, even if it's not 100% business, I would charge it from your business account because it's easier to keep track of. And then we can always add back in like, 20% was personal. So we're going to prorate it, at the end of the year, but you can deduct all of those. So sometimes actual is going to be more beneficial. A lot of times cars are so expensive that actual benefits you more than mileage. Unless you have like an older car that's fully depreciated and all that stuff, then mileage and like salespeople who drive a ton, mileage is just going to kill actual, but if you have like a normal car, you're still going to pay anywhere from 40 to 60 grand for it. And if you depreciate that over 5 years or even do some bonus depreciation that first year, you're going to get a significant savings. And then the gas. So then you have gas, oil, any maintenance, all those things are in actual. So it's just either or. Actual, keep track of all of that stuff just out of our checking account, or mileage, and we're just going to run it, times it by the standard mileage rate and see which one's better. I would think in your situation, probably actual is going to benefit you more.
Yeah, I think so. So so this is on top of the 50%. I'm trying to figure out, like, is it one or the other, or is it both?
One or the other. So
like, I'm thinking about like the cost of the truck, for example. So
actual, so say, do you mind sharing how much your truck was? Or we can make up a number, whatever. You can go 60 grand for a truck. 60 grand for a truck. If you drive that 50% for business, you're going to deduct $30,000. And the life of a car is 5 years. Unless we do bonus depreciation, which we can go faster. I don't really suggest that because you intend on making more money in the years to come. So I wouldn't use one of your biggest deductions in that first year, but you can bonus depreciate that because it's over 6,000 pounds. And you could deduct that full 30,000 the first year, or you can divide it over 5 years and you're going to get, what is that? $6,000, $6,000 a year plus your gas, plus your maintenance, plus oil changes, whatever.
Okay.
Does that make sense?
That's what I was asking. Okay. Okay, got it.
Okay. Perfect.
Thank you.
Perfect. Any other questions?
When you rent sorry, Serena. When you rent the house from yourself, do you have to show the money transferring?
You should. Yeah, that's what some of these things, so like they're really cool and everybody's heard about them, but not many people actually do them. Even like your tax accountant doesn't want to deal with it at the end of the year. They're going to be like, yeah, next year you can, because there's a lot of, not a lot, but there's just hoops to jump through, right? So you've got some hoops to jump through that you want to make sure that it's legit. And I would it's a big tax deduction. So I would do all of the things that you need to do to make sure that that's a legit expense for sure. Yep. Any other questions? I hear somebody talking. Okay, go ahead and skip to that next one. So number 6, S corporations and reasonable compensation. Who here, I'm going to skip back over so I can see you. Who here has an S corp? Okay, I see some. Hold your hand up. I want to see because I got to scroll down. I got 2. Okay, does anyone know what amount we definitely want to, what amount in net income? So your income minus all of your business expenses, and then your net income, at what amount do we want to switch over to an S corp? Does anybody know the answer to that? Scrolling. Okay, so I suggest about 30,000. If your net income from your business is over 30,000, which is fairly easy to get to, you need to switch to an S corp. You're going to get hosed in self-employment tax. So I would definitely suggest an S corp in that situation when you switch to an S corp. So what is everyone? Is everybody mostly LLCs, like single member LLCs? Who's single member LLC? Hand up. Good. Good. Okay. And then who's like a sole proprietorship? They still just do it under their social security number. They file on their personal tax return. Okay. All great. Thanks. Okay. So I would just keep that number in mind as you get to that $30,000 mark of net income that you're paying tax on that part of your business. We need to look at either doing some of these tax strategies to get you lower or get you into an S corp. For sure. It's just is going to save you on employment taxes. So S corps are awesome. The biggest thing that I see when people come into my S corp is they're paying themselves too much W-2 wages from their S corp. So the biggest requirement, if you're a single member LLC and you switch to an S corp, you only have to pay reasonable wages. If you set up your business as an S corp, as a legit corporation that files as a S corp, then you also have the requirement to provide minutes. the minutes for your business, to keep documented minutes of the running of your business, basically like a secretary or would come in and take minutes for you. So we have that requirement if you are a corporation. But the biggest thing is paying yourself a reasonable wage. A reasonable wage has lots of things that come into it. So I would have a professional look at that every year, because I have clients that only made 40 grand and they paid themselves 60. And I'm like, dude, you paid your employment taxes on the W-2 plus the business. So you paid the employee employment taxes, so that's 7.5%, plus the employer taxes, another 7.5%. You just dinged yourself with basically self-employment tax on all of those W-2 wages. So we want to be very strategic about the amount of W-2 wages that we're paying ourselves, and we can save you thousands getting that number correct on your S Corp. So you're actually using your S Corp to the best of its advantage. Any questions on that?
I have a question about if you're under the 30K, because I'm doing a new business. I'm actually.
Oh, I'm hearing background noise instead of hearing what you're saying. Sorry.
Yeah, I think somebody
there you go.
else.
Okay. Oh, there you go. Say it one more time. So you're starting a new business. You're still under the 30,000.
Yeah. Is it better to set it up from an S Corp from the get-go, knowing that you're going to be, or just do it like LLC and switch it over like normal?
I wouldn't, because you're just adding more hoops to jump through. Okay. You're adding more hoops. Now you have to pay for a payroll provider to do your payroll taxes, make sure you're filing all those things. Yeah. It's not worth it. It's not worth the cost until the tax savings outweighs it. And that's that $30,000 mark. You're going to save enough in tax that it's going to make it worth paying those extra fees, because now you have a separate tax return and all these different things.
Got it. Thank you.
Oh, sorry. Julio, I'm totally missing you. I saw that comment come across. Did you have a question? Did I say your name correctly?
Yeah, she did.
Okay.
Actually, going back to the 10% deduction, if you're running multiple businesses, can you then deduct the same 10%, or you have to break each down based on the amount of time for each?
Yeah, I would probably just do one or the other. So the IRS, the biggest thing when an auditor comes in is they're going to be very first looking for double dipping, right? So they're like, wait, you claimed that, but it's already claimed here. So that's going to cause them to ask more questions and dig deeper. So yeah, you only have one home office, whether one business uses it or another one. Just like if you were to rent an office, you don't rent it to every business, there's one expense, you can divide it and do a percentage and prorate it along the businesses. Sometimes it's easier to just claim it on one or prorate it if you care. You're on mute. Sorry, aren't you talking to me? So sorry.
About caregivers. Can caregivers deduct their own personal expenses, etc., for doing caregiving?
Tell me more about that.
I have both my sister-in-law and my sister who are the primary caregivers for my in-laws and my parents.
Okay.
And they do everything for them. I mean, they both are relatively mobile, but in terms of day-to-day care, medical arrangements, driving, all those kind of they handle all of that stuff.
Mm-hmm. Unfortunately, those are mostly like business thing or personal things. So my parents have done the same thing. They didn't need me to be aggressive enough. If you need the expenses, you need to be aggressive and do it like through a business or something. Then pay them. Now they're going to have to write off things. That would be really the only way. If you could make it a business, I don't know if it would be worth it. If it would save them more, then it would be worth the hassle. But you could. That would be the way to do it if you wanted to. Yep. For sure, you bet. Any other questions on those ones? Okay, go ahead and skip to that next screen. This is just going to talk a little bit about, okay, so these are the pros and cons of being a sole proprietorship, an LLC, or an S Corp. We also have regular corporations. I don't think that fits hardly any of us. That's only if you want to add stocks. I don't suggest a regular C Corp unless you're going to go public because you get hit with double taxation. So I didn't include that here. But, and I didn't include partnerships. Partnerships function the same way an LLC does. So just think of that if you have a partnership. The sole proprietorship, I would say the only con is unlimited liability and that you get hit with all the self-employment tax on that. So when we switch to an LLC, now you have the flexibility of being a sole proprietor. It's a single member LLC. You're not required to file a separate tax return, but you are, but it does limit your liability, but you still have self-employment tax. But then if it comes to a point where the self-employment tax are just too great, then we want to switch over to an S Corp and get the tax benefits of being an S Corp, but then you are required to pay those wages. So if you have any more questions on those, I'm going to go over that just really quickly. Go ahead and skip to the next, unless anybody has like some legit questions on that one. I don't know. That could be like a whole nother topic. I don't see anybody raising their hand, but speak up if you need me. Feel free. Okay, so we already talked about this. You just need to make sure that your compensation is reasonable and that you've got it set up correctly. Go ahead and skip to the next one. Okay, so let's go to, I want to talk about who saved the most. Is anybody brave and willing to share? And do you have any questions to be able to fill those out? The S Corp, I'm going to figure out for you because I feel like we'll go down into the weeds on that. So just put on the S Corp, put what your net income is after expenses, income, your revenue, all of your expenses, and then net income, the amount you would be taxed on, put that in your S Corp if you're an S Corp, and then put how much you pay for W-2 wages in the other one, and I'll calculate how much you would save by making that more reasonable, where it only affects a couple of us. Any questions on that? Who wants to tell me an amount that they had in travel that they could have written off? Or did I mute? Who wants to tell me an amount on travel that they saved? That they would have saved or that they already did?
For one trip, right?
Yeah, yeah.
Trip I took recently, $7 grand.
Yeah, nice. So we're gonna find ways that was business related, right?
I worked.
And document it. Good job. Yeah, why don't we always work? That's what I'm like, being self-employed, when do we know? What is not business related when we're self-employed, right? Anybody else want to share? What was the next one? So the next one is our home office. Who wants to share how much 10% or 50% of their home expenses would be for the year that they would save? None of you guys are being brave.
Okay.
I heard somebody talking about
That was me. Yeah. I said 18,000 a year.
18,000. That's huge. That's killer.
That's
Make
just-
sure you're.
I'm in a high price area.
Yeah.
San Francisco.
Cool. Yes, 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 ma'am. You are one of those high density I was talking about. That's big. But why not? Write it off. Take advantage of the things that are there to help us for sure. Good job. What else? Vehicle. Who bought a new vehicle this year? You want to ask if you want to deduct the whole thing or just a part of it? Anybody have any questions on that? You guys are smart.
Can I ask a question about that? What if you already own the vehicle?
If you already own the vehicle, but you haven't placed it in service, we can place it in service like as of this year and start your 5-year depreciation moving forward.
Perfect. Yeah, because I got it last year.
Okay. Michael just asked, I'm getting better at this on my phone. Michael just asked, is there different between new and used? Used, there's some limitations as far as depreciation when you place it in service. So it usually just ends up being over the 5 years, but sometimes we can get away with depreciating, bonusing it still. But there is some limitations on used. New, because they want to encourage you to buy new, encourage the economy to crank through items, then they're going to give you a bigger benefit if it's new.
And lease is no good, right? This is about a purchase.
Lease is great. Lease is, it's actual. So it wouldn't be, you don't get depreciation and your lease expense, where like if you're doing depreciation, you don't deduct your car payment, but you can deduct the interest you paid on the car, you know, so you kind of get two of them. With a lease, it's just the lump sum. You can just take full blown lump sum. It's more of just like an expense. It doesn't even have to go through the vehicle area, you know? So you
Okay.
get 100% of it, or if you're using it 50% or 75% business, then you would just take, you know, the percentage of that monthly payment and write that off.
All right, great. Thank you.
Yeah, I get that. Any other questions on those? What about the Augusta rule? Who has the highest Augusta rule? I think the 1200 was the highest. Maybe Eric, what's your Augusta rule?
Yeah, I just checked out. So the Four Seasons penthouse,
Mhm.
1,500 a night. So that's about 22,000.
Yeah, good job. Yeah, that's huge. And I would even suggest like looking at like higher, like the Augusta rule came about because of golf tournament in Augusta, Georgia, right? And the people were like, I'm renting out my house for 14 days to people coming in town, you know? And so they allowed that to do it from themselves because they were like, I'm staying here, but I could have rented it out like all my neighbors did. So why shouldn't I get the benefit? And so that's when that came across. So even look at like during peak times of the year. So like I'm in like a ski area. So winter time, I'm going to get higher rates because people are going to come for skiing and different stuff. Or if I've got a big festival or carnival or something, you know, that's going on, look at the peak times, like and use that number, you know. So that would be a good way to be a little bit more aggressive on that one. I love it. Anyone else? How about kiddos? Who has the most? Every time I change my thing, it mutes me. Who has the most kiddos still under 18? I only have 2. Dang. I liked when I had 3. You have 2? David's got 1. Who else still has kiddos? Take full advantage. David, your kiddo's little. You got 18 full years of that tax advantage.
He
Remind
just
me
turned
how.
2 the other day.
2. Okay, I couldn't remember. For some reason, I was thinking he was under 1. So just turned 2. Okay, so you got 16 years still. That's awesome. So yeah, so that's huge. So if you got 1, like deduct up to that 13,000. Now I just forgot what the number was, but we'll go back to it. 13,900.
I'll pay him next week.
Yeah, take some pictures, throw it in some advertising. The little ones are way cuter. They're good. They're good advertisement. Everybody's like, oh, I want to buy from him. He has cute babies. But don't you think, like, as we be real, like I have a friend that refuses. She's like, I'm just going to lose that one. I'm like, why? She's like, my husband won't let me post my kids. And I'm like, why? Like, as you share who you are, and I'm not great at it on social media, my husband is better, but as we share who we are, we're becoming more approachable to our clients, to our right people. Thanks, David. Call me if you have any questions. Sorry, did I move? Am I still not muted? So I think like those sort of things are legit, especially in today's day and age. Like people have to get to know you and trust you before they're going to turn stuff over to you, especially with financial things. So like I've always had to do in-person meetings, you know, but Zoom is allowing different things. But also like as I am starting to be more brave and put things out there on social media, like people are reaching out to me because they're getting to know me even beforehand. And that's building the trust and the like, I like her. Like I can tell that we have the same kind of values and we both have families and oh, she lives kind of by me. And you know what I mean? So those are all really great things. So take advantage of that and use those kiddos for it. Use advertising and different things. If you don't have kiddos, like, you know, do some investing in some advertising. Those are great ways to promote our business and good write-offs. What did we have next? So yeah, your S Corp, I already told you what to put in that, and then the reasonable compensation. Any other just random questions? I cannot see the time, Erica. So tell me, how are we doing on time? Are we good to?
We're right at an hour now, so we're still doing okay.
Okay. Okay. So let's skip through. I think I just have a couple more slides. I think we can skip the next one. Oh yeah, so just email it to me. Email me your results, and you're gonna email me, so you can just take a picture of the paper that you were working on. If you have any additional questions or anything, please reach out to me. Like, just give me a call. We'll get you on my schedule. I would love to be able to talk through your specific questions and be able to give you some solutions, because taxes are complicated. Like, I hardly ever do the same exact thing over and over. Everybody's situation is different, so I'm happy to answer specific questions. Just reach out, but send me your thing for sure, because I want to give somebody a gift card to Amazon.
Hey, Andrea,
Yes.
Are you still taking any new clients?
Yes. We're still, right now is our biggest like tax planning time of the year. So we're meeting with all of our current clients, but there's other people reaching out that are looking to see like what kind of savings that they can save before the end of the year. The biggest thing, I forgot to mention that, the biggest thing is before December 31st is when we can still make changes. After December 31st, we're very limited on what kind of strategies we can employ. It really only becomes like retirement and HSAs. And it just, those aren't dollar for dollar. So those wouldn't be the best tax strategies. So reach out before December 31st when you can still make adjustments, still make changes, and really take advantage of all these tax strategies before the end of the year.
Do you give Bellwether a discount?
Yes, I will definitely discount Bellwether stuff for sure, because I love. Oh, yep, but I'm offering just like a free consult for sure for everyone. I'm going to send out a worksheet of this also, like a PDF if you want to work through it and you run some numbers on your books and stuff and you have some different things. So I'll send you that as well. But yeah. Any other questions? You guys are so awesome. It's fun to see everyone's faces. Sorry that I had to switch to my phone. I'm like, it worked though, right?
This has been extremely helpful, Andrea. Thank you so much for doing this.
Thank you. I'm happy to help. Like I said, I'm a dork and I geek out about tax savings. So I'm constantly researching and learning, and even as like, but I'll be the first one to say like tax is complicated. Like, I'm not afraid to say like, I don't know the answer to that. I'll go research it, and reach out to my peers and other friends that are in the industry, and I'll get an answer for you, because just because I haven't experienced it doesn't mean that it's not out there. Like I said, everything is different. Like, I learn something new every single day, and that's what I love about the industry. That's what I love about the field. But there are basic things that everyone should be doing for sure. Everyone should be taking advantage of. Yeah.
Yeah, great. I learned a lot, and I'm going to call you.
Thank you. Yes, please do. Call me, ask any questions. Like, I'm here for all of you.
Well, thank you, Andrea. It was a pleasure having you come on today. We appreciate it. I know this will not be the last time we'll have you. It was amazing. Lots of stuff learned.
Yeah. So I know if it's like over, I know like it gets to be a lot. So process it, and then you'll have more questions. So reach out and don't be stressed. We'll make it enjoyable. You having me. So thank you, Erica.
Thank you.
Yeah, you bet.
Thank you.
See you guys.